For a moment there, I thought we were, having a little jam session. I was ready to, Yeah. Look at the bird. All right. Honorable Minister, Chairman of the Board, distinguished guests, both in the audience and online, hello and good morning, and welcome to Sygnus Day. So I have 10 slides that I'm going to try and, add my little color to today's session, following on the Minister's great speech. I'm not as bright as him. At least I went to the same school that he went to, so a little bit of, some of what he has rubbed off on me. All right, so my topic of discussion today is on private credit. And I'm going to try and peel the onion first, because I'm not sure that everyone knows what private credit is. So to think of private credit, just think of flexible debt instruments. That's all it is. It's just using a debt instrument that is flexible in its use. You can bend it up, twist it up, do anything you want to do with it. And we utilize that to serve two purposes. One of them is to allow companies to pursue their dreams and do what they do best. And the other one, of course, is to generate returns for Sygnus Credit Investments Limited or Acquisent Financial Corporation in Puerto Rico. And that then flows back to shareholders primarily via dividends. And over a consistent period of time, capital appreciation as well. So there are three broad investment strategies I want to outline. First one being capital appreciation, and all this is capital preservation rather. So this is just what you would call your standard notes, which are secured by some kind of real asset or secured in some other form. And this is normally used to finance growth, acquisitions, or working capital for companies. So in very large markets, private credit investors have the latitude to actually focus on only one investment strategy. So in many, many markets, a private credit investment company will just focus on capital preservation strategies alone because the market is so large, as you'll see a little bit later. But in the Caribbean market, because the market is so bifurcated, the total GDP of the English and Dutch-speaking Caribbean is about $50 billion US, excluding Trinidad. So it's not a lot of money in the grand scheme of things. So that's one strategy. Second strategy is what you call return enhancing strategy. And here, pretty much, you're going down the capital structure a little bit more, which is between debt and equity. So effectively, you get a decent coupon, for example, and then you have some upside. So you could say you have a coupon of 6-7%, and then you have some upside like another 5 or 6 or 7% that you can get. For example, if you structure a transaction where you say, I'm going to get 1% of the company's profit, starting in, say, year 3, and the company pays me a 5% coupon. And what this structure does, it allows Sygnus Credit Investments, or Acquisent as the case may be, to generate double-digit returns for its innovation and creativity to solve the problem that the client has, so that shareholders can get beautiful fat dividend checks, while at the same time it doesn't pressure the company's cash flow. So that's a second strategy that you can pursue. The third strategy is called opportunistic or niche, and this kind of fits in between the first two. So for example, if you are focused on receivables financing or inventory financing, or let's say leasing in airline space. So anything that is niche, then that's a strategy that can be pursued. So it's very important to take these three different strategies into perspective, because in large markets, there are companies that do only one or do a subset of one. In the Caribbean, SCI and Acquisent are going to play somewhere among more than one. So the three key points I want to leave you with here is that, one, there are multiple strategies in private credit, which you'll see on the other side why that is so. The capital that is being deployed is flexible, meaning the company does not come and we fit them into a black box. So you either fit this black box or you don't get any capital. It's flexible because we are structuring it to suit the need of those middle market companies that need financing. And when companies are growing very fast, the type of capital that they need is very, very different from your traditional bank financing and commercial debt, right? And that's the reason why the US is the largest alternative investment market in the world, and that's where private credit has thrived, as you'll see in a little while. And the third thing is that this type of capital that does these type of things reside in a completely different habitat from your traditional financing. And you'll see why further on during the presentation. So, second slide of, just trying to peel the onion again so that further on we can have a good conversation. The different types of strategies that I just spoke about, they will prosper at different times during the economic cycle. So if you think about an economic cycle, and the Minister of Finance was very good at explaining what happens when Jamaica got a shock and how long it took us to recover. So that chart that you're looking at, it's showing you economic expansion, which is going up, and then late stage expansion, which is you're all the way in your growth target, and the next thing that's going to happen is that the economy is going to start to slow down or decline, right? And sometimes you can have financial shocks like the minister would have explained. And then you have that cycle finish, and you start another cycle, and you have early expansion, right? And it just repeats itself, right? So if you think about that cycle, it means that for private credit investors, there are different things that will perform differently at during different parts of the cycle. So if you have a senior note, or let me use the word lending loosely, because at FCI we are not doing lending, and again the minister is here, we are using notes, right? Customized notes. So typically these type of investments, which are backed by, let's say, real estate or whatever else, will normally do fairly well across all cycles. However, when you are getting towards a recession, then obviously they may face a little bit more headwinds. In other words, the collateral that you thought you had before might not be there anymore, and if the company is running into problems, obviously your collateral value can decline, right? But generally speaking, these types of investments can weather most economic cycles. Now, when you look at, say, receivables financing or inventory financing, that's normally a kind of a specialty financing arrangement or niche. And typically, the structure of these can withstand pretty much any economic cycle. So it's what you call a kind of all-weather type of private credit investment. Of course, the challenge with it is to generate enough deal flow to focus on just that one channel alone. You also have, say, mezzanine or profit-sharing transactions, which are really, you're trying to get additional returns, right? So in the case that I explained before, where you're trying to enhance your return, let's say a company comes to you, and the way the transaction is structured is there's a 5% coupon and 1% of profit. Then by having a lower coupon, the company gets an opportunity to grow faster because it doesn't have to pay back a lot of debt. And if it does very well, then you get that 1% share of profit, say year 3, 4, 5. And if it does extremely well, and the company goes on list on an exchange, then all of a sudden, the 5% coupon that you were getting can turn into 15 and 20% return. So there are these mixture of strategies that are pursued by private credit investment companies. So now, having said all of that, what are the statistics on this asset class? So in 2006, you had about $150 billion in assets under management in private credit in the world, right, globally. When we were starting Sygnus Credit Investments, which was just on a sheet of paper in 2017, the industry had AUM of about $568 billion. As of last year, according to Preqin, that the AUM would have grown to 1.2 trillion. And when I'm speaking about US dollars, right? Not Jamaican dollars. 1.2 trillion US. And by 2026, which is just 5 years hence, we're talking about this industry AUM doubling to about 2.69 trillion US. I want us to think about that. 147 billion in 2006, 1.2 trillion in 2021. 5 years from now, it's going to double, 2.69 trillion. What does this mean? It means that this is a very, very fast-growing industry. Why is it fast-growing? Clearly, because businesses, medium-sized businesses, all over the world need this type of financing in order to fuel their growth. So it's very important. In the emerging markets, in 2009, the deal flow moved from 2.4 billion US to just over 8 billion in 2019. Again, any statistic that you look at, the growth rate is very, very rapid. Sygnus Credit Investments Limited, when it started with 16 million US dollars. The company is just 5 years old. And it has, collectively with Puerto Rico, 250 million US dollars in assets under administration. So it's not lost on us how fast this industry is growing and the need for not just Jamaica but the Caribbean region and territory to embrace private credit investing. Now, I know the minister, made some great points about how the Jamaican government is enhancing the flow of alternative investment capital in the Jamaican space. And of course, Barris, as chairman of the Caribbean Alternative Investment Association, CARIA, has been championing that cause across the Caribbean region. And we know that we all have to come together across the Caribbean because deal flow is very important, right? One single person don't want to go and do a 50 million US dollar deal. You need to, syndicate that transaction down and have many participants to reduce the risk. So one of the things that we would ask the minister to do, in addition to what he has so eloquently spoken about before, is to not just the minister, not just Minister of Finance of Jamaica, but pretty much all of those regulators across the region who are responsible for setting asset allocation limits for pension funds and insurance companies which are long-term investors, right? Because there are additional themes of investment that are coming up in private credit. For example, climate awareness, climate change, ESG investing, impact investing. All of these themes need alternative investments to play a major part. Governments don't have the capital to finance them. But if we need to make a difference in the Caribbean region, then private capital absolutely has to lead that role. And while we need capital to come in from outside, we also need some of that long-term capital that is residing right here, a lot of it sitting in government paper still, to actually take the leap and deploy that capital into something that will actually benefit several generations down the road and us as Caribbean people. So the challenge that exists currently, and I'm sure that the minister and his team are looking at this, is that the classification of alternative investments is kind of wishy-washy. It is lumped in a little group with many other investments that aren't really doing much. So we are asking for there to be kind of a carve-out for alternative investments specifically, and for example, for private credit in particular, simply because of all the asset classes that exist, private credit is literally the fastest growing asset class in the alternative investment industry. And I just showed you the stats. It actually grew faster than real estate and private equity and venture capital over the last 10 years. The only thing that beat out the growth in private credit would have been infrastructure, which grew at 15.1% over the last decade versus private credit's 13.1%. So we really need that consideration so that when fund managers are looking at their portfolio, they know that I can carve out X amount of my portfolio. It's not large, but if it's lumped together with your normal if private credit is lumped together with your normal corporate bond and all kind of other funky stuff, and there's a 5% limit, as is the case in Jamaica, and some other places 2%, etc., then that does not assist with the development of the space. Because when an external investor wants to invest his capital, one of his first questions are going to be, how many institutional investors do you have from your region who is participating in this? And those guys love to write big checks. And of course, we know that the biggest checks that can be drawn is collectively from our institutional investors. So I just ask for that one small consideration from our Minister of Finance as well as to all of the regional regulators who control how capital is actually allocated by long-term investors. So before I go further, one small case study that I'm going to share with you guys, which was actually in the newspapers. So the question arises in private credit investment, what is it that middle market companies want from a private credit investor? If we have $1 trillion US, other than getting our capital, what is it that the middle market companies are really seeking? Why don't they go to a bank, for example, and get that capital? Why do they bother with private credit investors? Well, there are really 4 things that these companies need to enable their growth. The first one is flexibility, meaning structuring the financing such that it specifically tailored and meets the needs and the growth plan and the strategy plan of the company in order to achieve its corporate objectives, which may be, whatever that profit target may be. And this is very, very important because in traditional debt financing, you pretty much have a black box that you fit into. In private credit, it is customized. So, if John Brown's company has a plan where over the next 5 years, they need to do some acquisitions, at the moment, they are unable to really, take on an amortizing debt where they're paying back principal plus interest. And when you look at their business plan and the strategies that they have, it is real. It is not a figment of someone's imagination. Then what the private credit investor would do is structure that transaction to meet that specific need. So if it means that we need to take a seat on the board in order to give them that freedom of not paying back an amortizing security, then that's what we'll do. A bank doesn't have time to really do that. If you're going to deploy $2 million to somebody, you don't have time to take a board seat or take board observation rights. Because that's not what banks do, and that's not what they should do. They shouldn't be doing that. They are taking depositors' money and have to deploy it. And so they have a specific type of way to invest and get their returns. A private credit investor is long-term capital. We have patient capital that resides in a different habitat. And so we can do this. Second thing, is to solve complex problems, which means serving the interest of the client. It's not about us making a high return or not. We have to be solving a problem for the client. And I have a case study to show you. Third thing, speed and agility. It's not going to take 3 months for somebody to give the approval. It can be 2 weeks, 3 weeks. In fact, Sygnus Credit Investments funded a 13 million US transaction in under, I think, 10 days. And this was to finance an acquisition. And normally acquisitions take forever to go through the deal structure, let alone for the capital to leave out the door. And it's not that we didn't do a good job. It's just that business is set up for decision making to be very, very fast. So 2 things on this. One, you need the speed, but you also need the size balance sheet to fund. If somebody come and say, I want 20 million US, you need that scale to be able to commit to 20 million US to solve a massive problem. And once you're able to do that, then the velocity of growth of our medium-sized companies, they'll move from medium-sized to big companies very, very fast because they can fund an acquisition that somebody else from outside might have the capital and can fund it, and that opportunity goes away. And we have financed, I don't know, 70, 80 million US dollars worth of acquisitions over the past 2 years, including during the middle of the worst pandemic that the Minister of Finance spoke about. When banks the shop was locked. During that period, Sygnus Credit Investments Limited was financing transactions. Why? Because we have a relationship with the clients. We know what we are financing, and we can solve the client's problem with solving a complex problem for them. So the last thing is partnership model. Private credit investment is a partnership between the investor, such as Accrescent Financial Corporation and Sygnus Credit Investment, and a medium-sized firm. It's nothing more than that. It's a partnership. We have regular chats every month, every 2 months. Sometimes we go to board meetings. If we have board observation, right, we are following up. We know what is happening with the client. And this is a relationship model. It is not a black box. There aren't 100 people out there chasing down a deal to meet a target. That's not how it works. And so because of this, over 60% of Sygnus credit investments, and also Accrescent, a large proportion, is from repeat customers, either individual repeat customers or repeat business from shareholders of different companies who, you're a shareholder of this company, you do a transaction, it works, then when you're wearing your hat in another firm, you come back and say, you know what, those Sygnus guys can solve this problem, or those guys at Accrescent can solve that problem, and you come back for a second round. So finally, in terms of the case study, simple thing, initial investment, 3 million plus, we were bridging a bank loan, February 2020, 1 month later is COVID, and so obviously, because this is financing a bank loan to construct some buildings, there's a problem, right? Because COVID locked down everything. And so there's no cash flow coming or anything. And so the client faced a situation where they were going to go into default. So they would have a default notice hanging over their head, and so forth and so on. And of course, to solve the problem, you know, what Big Greg and his team did was they got on a plane and flew to the country and, you know, strengthen some relationships and solve the problem for the client such that there's no default notice hanging over the client's head. The off-taker for those buildings got to get their buildings without having to provide cash upfront, given that we are in the middle of COVID. And the transaction was pretty much restructured as a receivable that had, you know, more secure underpinnings than when we first went into the transaction. And the outcome of all of this is that Sygnus Credit Investments got paid its interest, paid up, penalty interest also paid up, meaning it made higher returns, and we have built relationships where additional deals have flown from this very same source, which are larger than the initial $3 million transaction that we went into. And that's why we are saying it's a relationship business, where you have to solve problem with a blank sheet of paper. All right, so the next 3 minutes and I'll be done. You know, in 2016, SCI took a blank sheet of paper, went and raised capital, tried to convince Mr. Keith Collins over here to put some money into SCI, which, you know, eventually the money came through on that fateful day. But the 60 million US SCI started with, right? So, you know, SCI concluded an acquisition in February this year of Accrescent in Puerto Rico. For those who don't know, it's a US territory, it's a $100 billion economy. Meaning, when you take the GDP of Puerto Rico, it's bigger than all of the Caribbean countries when you add them up. And so therefore, effectively what SCI has done is taking a company that was here and put it up here. So in total, in terms of capital deployed, from both platforms combined, you're talking about 640 million US dollars. That is dedicated to middle market or medium-sized firms. I want to say it again because I don't hear no clap or no. $640 million and counting of capital that is dedicated just to middle market companies in the Caribbean. 250 million US dollars in assets under administration. SCI's June financial year end results, the revenue was 11 million. Remember, the company started in 2005 with 2017, July 1 with $0. $0. $9 million, 9.3 million really, in dividends paid and declared. The latest dividend is going to be paid on October 15, I think, to shareholders on record as of, I think, September 29. I want you to think about this. We pay about $9.3 million of dividend on $60 million of share capital. And it's only, dividend started, the first dividend was paid in 2018. It's only 4 years of paying dividends. And we pay dividends during the middle of COVID. We never missed a dividend payment yet. Invested across 16 industries, 9 territories, and the companies and SCI only, this does not include Accrescent. The impact of SCI and the workforce across the region is 8,000 employees, the companies that are on the balance sheet today that SCI affected and impacted. So if you include Puerto Rico, you can double that. So as a result of all of these things, SCI's credit rating, and when we set out, we said SCI was going to get rated by its 5th year operation, and we kind of got ahead of ourselves by 1 year. And so the most recent rating report from CARICRIS is that we got upgraded 1 notch, where we are now JM BBB+. On the Jamaican scale, and carry BBB- on the Caribbean scale with a stable outlook. So the question now is, okay, that's in the past, you don't drive a car by looking in the rear view mirror, you just use it as a little guidepost sometime, but you need to look ahead. So the question is, where are we going from here? I hear Barry put out some stats on what the alternative market is in terms of the actual assets in the alternative space. I'm going to give you what the size of the private credit industry across the region is, which over the medium term, this industry over the next 2-3 years, we expect that it's going to grow to be between $3 and $4.5 billion US. And that's because, how is it going to get there? Get there from where it is today, about 700 million thereabouts, because of the scale of Sygnus Credit Investments and Accrescent's platform. No longer are we going to be talking about launching new, sub-funds, for example, which is 10 million and 20 million US. If it's not 100 million US, it's just not going to happen, or close to 100 million US. Why am I saying this? Because you need scale. If somebody has, a wind farm or any such type of alternative or climate resilient or impact investing type of focus, these are not going to be ticky deal flow. You need big money, 20 million, 30 million at a pop. And that's the reason why the industry also needs other players to come on board, right? Because the more players you have, we put in a $20 million ticket, the next man over there so put in a $20 million ticket, the next man, by the look, 3 or 4 people done the $100 million to fund something that can be transformative for the region. That is what we want to do, and that's what we have to do. If we don't do that, then we're just wasting time, right? So, right now, our origination pipeline is 200 million US plus, and I say 200 million US plus, so it's not that the number is close to 200 million, but that's what I want to say at this time. 200 million US plus. And we are seeking to raise, in negotiation to raise a very large credit facility. You can imagine if we have 200 million US plus in pipeline, then obviously our financing has to be an order of magnitude that can facilitate that. And what this will help us do is to generate new fee income, new revenue streams. If you think about SCI over the last 5 years, it effectively had one revenue stream, which is just net interest income. Why? Because of SCI's scale. And because we wanted to ensure that we could show investors after 5 years a track record that we not losing investor money. A track record that we're not coming to a period where we are saying, boy, say, we have to go a year and we can't pay no dividend because X, Y, and Z. We had to be deliberate and ultra conservative in terms of what we put on the balance sheet. Now that SCI has scale and it's going to get bigger, then we can start to include some other things that we couldn't before because those type of transaction requires scale. If you're going to do a proper receivables financing program, 2 million and 3 million don't make any sense, right? We have executed a 25 million receivables financing program in the Bahamas, and we have, the first drawdown has already occurred, which I won't say how much that is, but we have already done the first drawdown of that. And so we are doing transactions like these, which are going to be at scale. And what we intend to do is to allow you investors, meaning pension funds, high net worth clients, and possibly retail clients when the regulations allow, to participate directly in some of these transactions to get some of those good yields. The yield on SCI's portfolio is 13%. Rates are going up, the yields are going to go up. Everybody knows this, right? And of course, next thing we're looking to do is to, complete the integration of Puerto Rico into Sygnus proper. After that, we speak the same language, walk the same walk, talk the same walk. We learn from their experiences. They have gone pretty much 19 years in private credit investing. You know what their net loss is? It's less than 0.1%. And they are 19 years in an economy that was in default for about a dozen years or more. I want you to think on that. So that means the man are a real superstar and lady. So we expect, this to happen to the platform. And then share buyback, which we have spoken about a lot, of course, is not, it's not new news. From day one, we said to shareholders, we are going to buy back up to 15% of the outstanding share capital of the company, in around year 5, thereabouts. We are close to that time, and so that share buyback is going to happen, and it's probably get announced at the AGM. And of course, we intend for the dividends for SCI over the next 2, 3, 4 years to do like this. If we have this type of pipeline, and we are successful in raising the financing that we are trying to raise with our international financing partners, then clearly, the sky is the limit for this credit platform. So in terms of investment opportunities, obviously SCI will have preference shares in the market, it will have notes and bonds and so forth and so on, but it will also have co-investment opportunities for those who are in the Sygnus family. You know what I mean? If you're in the Sygnus family, then yeah, you get a little thing. And, I want to leave an idea with you. I'm not giving financial advice, Minister, but if interest rates are rising and you have private credit investment companies that are on the US stock market and elsewhere, whose underlying portfolio is variable rate, then it's only one thing is going to happen, right? Those companies are going to make a lot more money. The ones that are properly managed, they're going to make more money. If you go and look at the 2008, 9, 10 global credit crunch, during that period, private credit companies made the most money on record. And just during COVID, 2020-21, private credit companies exceeded the record that they did in the 2008 global financial crisis. Why? Because they have flexible capital. When a good company needs liquidity, but it's solvent, so it's not going out of business, it just needs liquidity. It just needs cash. So it's not insolvent, it needs cash. You can make a pretty penny by providing them that cash in their time of need. It's as simple as that. And that's what the companies have done. So, if you want to make some money, it's a free idea. You can take a look at private credit companies that are listed on the US Stock Exchange. And of course, you can always go and buy more of the undervalued Sygnus Credit Investments shares. Thank you. Well, no. Can't leave out the people, let me know. Yeah. 30 seconds. So, the private credit platform that Sygnus has is not a baby platform or a play thing. We started the firm with 7 Dege employees. 7. 1, 2, 3, 4, 5, 6, 7. Today, collectively, there are 60 plus Sygnesians. And of course, if you take all our collective expertise, it's 100 and enough years. So the Sygnus thrice principle of innovation, independence, and integrity. Innovation means you solve problem from a blank sheet of paper. So even though we're not as bright as the minister, we have someone who's pretty close to him in the bright department. Greg. And Ike. Independence means independence of thought. We are thought leaders. We don't follow back on nobody. There's nothing that can work for us. Blank sheet of paper, we are going to solve it and figure it out. It's as simple as that. And we're not beholden to anybody. We make the decisions in Sygnus collectively. We don't have to go to John Brown or somewhere else or some other foreign country to get permission to do what we want to do. It's your local Jamaicans, your local Puerto Ricans, your local St. Lucians, etc., who are making these decisions. And the team is empowered. So, thank you very much.
Don't go anywhere. Thank you so very much for your presentation. Honestly, when you mentioned the $640 million and no one clapped, I thought maybe because the room is rich, $640 million is just monkey money. Yeah, just peanuts. So because of the kind of person I am, I took to the calculator because I like to know what this means in local money. That's what I did. And the calculator rendered the coefficient, some scientific notation. In other words, 98 billion, like 98.8 or 9 billion dollars. It's a big deal. It's a big deal. So I know that we might not have a lot of time, but we are taking questions from those of you, of course, online. We just ask you to submit your questions in the question and answer tab, which I already have. And for those of you who might have a question or so in the room, we do have roving mics. So I'm going to start with this question. What role do you believe private credit will play in developing the wider region, which I do believe you touched on, but is there anything that you'd like to add to that?
Yeah, so, our view is that private credit is at the heart of the alternative investment ecosystem in the Caribbean. Why am I saying this? Because it is the easiest path of resistance, or the channel through which capital can flow the fastest. Because investors can invest their money and expect a return, and on a short time frame. So, Sygnus Credit Investments Limited average investment tenor is 1.8 years. So we have a yield of 13% and it's 1.8 years on average we invest the money for. Accrescent is about 2.1 years, right? So that's a short horizon to deploy your capital. If you go into private equity, that's a different type of animal and it serves a different type of need. And if you go into real estate, etc., etc. So because private credit is so fluid, you can fund a transaction today and next month, I can exit the transaction if somebody actually wants to buy it from me. I can sell it to like a pension fund or insurance company, and then I take the money and go rinse it again. And so, because not that type of rinse.
Right. I was just hoping because we like to speak with clarity and context, especially when we're speaking about money.
Yeah. Recycle. Good word, better word.
We recycle.
So, because you can reinvest at a very rapid pace, then it is a very, very viable path. And therefore, when you look at private credit for medium-sized firms, that's the channel that you can do like this and deploy capital and assist companies, whether they are doing an acquisition, whether they need working capital assistance, whether they need innovative things like, you need an inventory, you need a commodity inventory financing. So you are, selling widgets and you have a very large order of widgets. You already have bank debt and, when you go to the bank say, show me some more collateral. Show me some more land. Right, Mr. Zaka? Yeah. And the bank say, well, we can't lend you the money. You come to Sygnus, we look at it and say, all right, how we are going to solve this? So Big Greg take out him calculator and him pen and him blank sheet of paper and him say, all right, now worry yourself.
Lovely.
Now go structure it such that the commodity what you have it's going to be the collateral. All you have to do is buy back, guaranteed a particular amount of it from me every month at a particular margin. We make our double-digit return. The client get them money, do what they want to do.
Everybody
and we
benefits.
Go, yeah.
All right.
Simple.
Do we have any questions from the room? Any questions from the room? Okay, we have a question over here. Thank you so very much. You can let us know your name and where you're from if you'd like.
Pleasant morning, everyone.
Hello.
My name is Michelle Carpenter. I am a classroom teacher. Question.
Welcome.
What role do I play in engaging and educating my young entrepreneurs as it relates to alternative investment? One of the things that I love about my work is that I am blessed with young entrepreneurs, teenpreneurs with brilliant ideas, but like many of us, they are discouraged because they hear the older ones talking about lack of access to capital. What do the Generation Z, what do they need to learn about alternative investment? What do I need to say to my kids when I go back? And just a suggestion, I am a part of this pioneering community. I am a part of the Sygnus group, and that is why I'm here, but I'm also here to take back so I can feed my children. Any plans to have a Sygnus Day Students Edition?
All right. Thank you so very much. Thank you so very much for that contribution.
All right, you show me your hand and I'll, one up you, right? So, one of the things that we are very passionate about is mentoring the younger generation. I'm not that old still, but yeah. Mentoring the younger generation. So, effectively, private credit is kind of a peel onion type of industry. So, one of the things that we can do is ensure that they log on to the Sygnus website where you have a lot of material. But if you can, or if you want to, you could absolutely organize a day or days for Sygnus to pass through, and I'll make myself available and pass through and just have the fireside chat and the one-on-one reasoning, you know what I mean? Or they can pass through the Sygnus office, just tell me when they want forward, and then forward, and we just have the chat with them one-on-one. Simple thing.
I like Jason.
Yeah.
Jason is just like your forward. Just tell the people them say we're there for plugging the thing, we're not there for plug it out. And you know what? It's important. And I'm going to say why it's important, because a lot of the times when we have entrepreneurs and youngsters or just average persons who have great ideas, it is intimidating sometimes the way in which financing and investment is positioned. And so when you hear somebody who's extremely relatable and can still digest the information, I think it will go a far way. I have a question. How does Sygnus see itself contributing towards the growth in the private credit space?
Well, we see ourselves as leading the charge, so to speak. 5 years ago, when we mentioned dry powder, everybody thinks they were talking about, the machine them. But dry powder is a term that is used in alternative investments. And we first bring it to the market. I remember lots of discussion when, we were saying, don't put the word dry powder in the report because people are going to misinterpret. And we have to educate the market. Mm-hmm. The market needs to know what the lingo means. Now, everybody and their grandmother using the word dry powder. So, I am saying that we see ourselves as pioneers and leading the charge, and that's the reason why we organize this seminar. That's the reason why, Burris is leading Carrier at the moment. That's the reason why we are co-founders of Carrier, along with many other people in the industry. And that's the reason why we are going to come out with new initiatives and new products so that people can really understand what this industry is about, because it's not going away. The private credit baby, born already, and it just going to grow from strength to strength. It will soon turn into teenager and then grow into adulthood. And that's the way how we see it, and that's what we think our role is.
The final question, you just mentioned new products. A question here says, are there any plans to create products that allow retail investors to participate in the alternative investment space?
Other than buying the shares, yes, once the regulation allows for it, absolutely yes.
Oh, I have one last one. Which other Caribbean territory does SCI plan to expand to fuera de Puerto Rico, outside of Puerto Rico?
Oh, just pick all of the Caribbean territories. That's in the future. That's what's gonna happen. You know, Accrescent in Puerto Rico actually had operations in many other Caribbean territories. So when the time is right and ripe, we will, you know, take up the mantle again and expand when we see fit. But, you know, that's the only way the business is going to grow, by spreading its footprint across the region.
Ladies and gentlemen, a round of applause, please. Breaking boundaries with private credit. Thank you so very much, Jason, Morris.